Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Friday, September 18th. Before I forget about it, I want to remind everybody that today is a big option expiration day. We've got triple witching, which is single stock options, um, the index options, and the futures options all expiring today. And when we look at the price action of the last couple days, part of what we may be seeing is that there may be forces at work that simply do not want this to go down until OPEX closes. They call that max pain, where they park it at a place where both the put buyers and the call buyers, the majority of them lose. That's why they call it max pain. I don't know where that point is, and I don't know if any of that has anything to do with the price action of the last couple, what we saw yesterday and what we may see today. But keep that in mind. Also, it's a reminder, if you have any September options on the regular monthly expiration, make sure you deal with them today, or else you may get an unwanted surprise tomorrow morning to find out you've been assigned X number of shares of something. So it's always good to do a double check each and every Friday morning, especially if you are trading some positions in weekly options. You want to make sure all that's taken care of and that you're aware of it before the close. Okay, what I want to do this morning, I'll go through our normal names. I think it's really critical to keep an eye on these given where we are. But on the indexes, I want to back it out to the 2-hour chart so you can get a better picture. Raise up the magnifying glass a little bit and get a little bit bigger picture of what's been going on the last couple of weeks. So we had this nice 2-hour channel on SPY. We had somewhat of a blow off top last week. We tagged it and then we liquidated to close the week, and then took a leg down. And since we've been consolidating within the box, 342.50 has been a wall thus far. From the bottom of the box to the top of the box, back down, but that sequence has been in place for the last few days. Now, yesterday, there was the initial drop down to the bottom of the box. They came up to the midpoint, tried to close the gap, was not able to do that. Came back down for another check, and then had a decent close. All things considered, the price action yesterday was bearish. Even though they had a nice close, I would just say the bulls defended the line in the sand like they had to do. That's a win for the bulls. They did not let this trading range break. So check mark for the bulls. But anytime you're at the bottom of a trading range, the bears have done their thing. They too defended a line in the sand. They did not want to see this 342.50 break out to the upside, or they would lose control of the tape. So right now there's an equilibrium within this trading range. The key levels for today are this 337, 338 line that we've been talking about. if you see a break above, and you can go down to the 30-minute charts. I'm not going to go through that again today. The levels have been so well defined. But if the bulls can make a push this morning, you can buy, 337.50, 338, depending on the time frame that you're trading, and look for a push back up to 342.50. And if the bulls can take out 342.50, then we head on up to 348, 349, which is the next level of resistance. So if you're actively trading, those are your key levels. And, if they park it inside the box today, which they could very easily do because they don't want either the bulls or the bears to get any kind of big directional move on an option expiration day. They want to keep everything, kind of in the middle. Then we pick up the ball next week when everything, after an option expiration day, there's a general reset of all the positioning. So if there's no decisive move today, then we just roll into next week and it's a whole new ball game. The same levels will be intact, but there'll be a lot more freedom for price to move after the option expiration. So keep your eye today focused on the recent lows, 332, and the 50 EMA, which we've been talking about, which is like 331.70, something like that. If it breaks below, you can get short. By the same token, you can get long any of these levels, or just wait until you get a decisive breakout above 342.50, and then that would be a great place to anchor a long, because this is a $10 wide trading range. And from our previous work that if you break below or above a well-defined trading range, the expected move, the measured move, is the width of the range. So on a breakout or a breakdown, we'd be looking for a $10 move on that, by that measure. So that pretty much sizes up the situation. I do want to point out that there are some pretty decent bullish divergences at work under the surface. If you notice, let's look at RSI. RSI came down to the 30 level on the initial plunge. When it came back to that level, RSI was higher. We make another cycle up and a cycle back down, RSI is even higher still. You'd expect that if price was in the same location, RSI would be in the same location as well. That's not the case. We've got a strengthening RSI, and we've got strengthening momentum. Right here we can see that momentum came down on the initial plunge, came down to the same level on the second tag of the low right here. But on the third tag, yesterday, momentum was way up here. So by that measure, the bulls are showing some strength under the surface, and we need to be aware of that. So keep that in mind as you're trading today. And you're not going to be trading off the 2-hour time frame. You're going to be looking at shorter time frames, like the 30-minute or the 15-minute or the, whatever you're doing, 5-minute. Keep an eye on those bullish divergences and be aware of them as you're trading. All right. QQQ. Notice again, very, very similar pattern. Everything is the same except the levels. We've got bullish divergences working under the surface, rising RSI, rising PPO. We've had a well-defined range between 268 and let's just call it 280, 280.50. So that's $12 range. On a break below 268, we'd expect a $12 move down in here to the 255 area, 256, something like that. And then above, we'd be looking for 290, 292 on a breakout. All the same discussions apply. 275 has been a key level, midpoint of the range. Price was weak yesterday, was not able to close the open gap. If you want to be long against 268, I think that's fine. Assume that it holds today. Maybe you carried a long overnight. I have no idea. But let's say you're out, and I looked at the futures as of 7 o'clock, and it was up about 0.4%. So if we open in here, let's say 272, that's a hard place to take a position. I think you should either wait for a price to come back down to 268 or close to it to get an objective long, or wait for a break above 275 where you could anchor a long for a push up to 280. And the bears, if it looks like 275 is going to cap the advance, that could be a level that you can shoot against on the short side for a move back to 268. On the daily chart, the Qs are now trading just below the 50 EMA. So on SPY, just above the 50 EMA, we'll see in a minute that IWM is just above the 50, and the Qs are just below. Now, I've made a point of emphasizing in the last couple of videos of, the algorithms keying off of the 50, and, I probably overstated the downside scenario from the standpoint of this. I was saying that if there's a break of the 50, you might see accelerated selling because of the algos kicking in, and those funds that are tied to momentum kicking in to sell. That all is well and good, and I still believe that. But SPY is still above. And what you always want to see, whether you're a bull or a bear, is you want to see confirmation from the other index, from what's going on. So for example, QQQ is just below the 50, but SPY is still above, therefore not really giving confirmation that there's a wholesale breakdown. We may see SPY lead to the downside, which it has been. But until SPY breaks, you may not see that accelerated move. And also, I want to point out that there's probably just as many algos, the same ones in fact, that are in momentum strategies that says buy the 50 because it's worked. Support is support until it's broken, and the 50 is a key support area. So when price comes into the 50, if the overall trend is up, algorithms will trip to say we're supposed to buy that. We're at support. So you can see yesterday, and you can especially see it on a shorter time frame chart. Probing, would not let go. Every touch of that 268 yesterday was bought. Thus, it held. So those are those pre-wired algos and other, individual traders as well out there saying, I want to buy the 50. When that flips, all those people become sellers because they got stopped out. Their buy here didn't work. So 268 is support, and it will remain support until it's broken. So again, a well-defined range, $12 wide, certainly be long above 280.50 and certainly be short below. Until we have a decisive break up or down out of this range, we're range bound, and you can trade the range inside if that's your thing. Keep those bullish divergences in mind as well. IWM, we were in this range for a while, and now we've dropped down to this lower range between 150 and 155, another $5 range. This was an overshoot or a bear trap, however you want to look at it. Price in the upper half of the trading range. So a break below 153, 152.5 favors a move back down to 150, and a breakout above 155 favors a move back to 160. Same kind of idea as the other indexes, which are also range bound. And we talked a little bit about the outperformance of IWM on a relative basis because of rotation into value, the beaten down names. A lot of those smaller cyclicals are in the IWM index. So it has remained on a relative basis stronger. You noticed yesterday SPY and QQQ bouncing along the bottom of the box. We don't see that here. Price did not come down to the recent lows, so it's showing relative strength. Let's move on to the FANG names. Very weak yesterday. We've got Facebook, Amazon, Microsoft, and Google all under their 50-day averages on the daily chart. Apple is sitting right on its 50-day. So those have broken collectively. Those have broken below the 50. So those are in a very bearish posture. As you can see here on Facebook, it was down a lot yesterday and, put in this green candle right at the end of the day. But it's very weak. Now, could we get a kickback rally? Sure we could. We could go up here, to 260 and test that level. Maybe go up to this downtrend line at 263, which you see here were the prior lows. That would be a resistance level. If you wanted to get long this morning, if you're an intraday trader and you see strength, you can buy 255. Remember, we always say recapturing a level from below is bullish, so you could buy that. See if you get a ride up to 260 or even 263 today on a big strong rally. Sure, that could happen. It could also happen that we get a little run up to 260 and then it roll over. But if we get rejected, anytime today, the first target is this big $15 wide gap at 249. We got close yesterday. The low was right at 250. I would expect at some point in the very near future that this 249 at least gets tested. And if it breaks, you certainly want to be short for this $15 wide potential gap fill if things start deteriorating either, today or into next week. I won't say you have to be short. You do what you want to do. But that's a fantastic, fantastic risk reward trade right there. A $15 wide gap down to 233. That's one you want to keep on the radar. Let's look at Apple. This is one we're in. It too has some bullish divergences going on. Lower lows, but with RSI and PPO rising. I hope I and we don't regret holding that yesterday at support. I was thinking that the Qs might break down yesterday, but they didn't. So we got to be prepared for a bit of a rally, potentially back up here to this downtrend line. I hope we don't give it all back, but we'll just have to wait and see. And if you see any developments, on your own, and you want to cash out, it's still a winning trade, just not as much of a winner as it would have been if we closed it at the lows yesterday. So you do what you want to do on that. I still have mine. I'll let you go. I'll let you know if I close it out. But I'm still thinking lower. And even if we have a little bit of a rally today, I plan on holding that into next week. Now, if we go and break, 113.50, I'm out. And that will have been a blown trade as far as I'm concerned. If you let that, winner turn into a flat trade, that's almost the same as losing. But be that as may, let's see what happens today. We've got a downtrend line here, lower highs and lower lows. We'll see if they burn through these bullish divergences and turn down. So that's how to handle Apple. And again, like Facebook, below 108, I think you got to be short. I really do. That's a great risk reward trade. There's just one little days of price action stopping 108 going to 96. You want to be short on that. Amazon, maybe even the weakest of them all, really. I was watching that price action yesterday, And even on the morning bounce, Amazon did not participate at all. At all. It was hugging this 29.75. And I sent out yesterday on that midday note or morning note that it was clinging. There's a massive, massive void underneath 29.75. And the way all these mega cap names are lining up, they're all on ledges. They're all on key support. They either hold or they don't. And I imagine that if they break, they're all going to break at once. So have your ducks in a row. And if you're a bull, if you're thinking on the new highs, you should be buying across the board on these names, because if there was ever a place for support to hold, it's right here at the 50, at key support. If you're a bull and you think it's going higher, this is where you buy with a stop just below. That's very objective. I wouldn't criticize that trade in the least. This is a place to get long if you think we're heading up and going to new highs. Google, lower highs, lower lows, same bullish divergences, not so much on RSI because it did come down, but on momentum, higher momentum at lower prices, that's bullish divergence. I could see this coming up today to backtest 1505 or even this downtrend line, and we'll see how that handles it if that's the case. But if this 1465 were to break, then we're coming back down to the 1400, low 1400s. Netflix, same thing, lower highs, lower lows. You can see the makings of a nice downtrend line there. Very well defined levels. This 475 you could buy for a potential gap fill to 485. If you weren't in it and you saw that run up to 485, that's your objective short against the downtrend line and lateral resistance. On the bullish side, you want to be buying 475 and buying a breakout if it were to break beyond this downtrend channel. Those are your key locations: 485, 475, 465, key support if it breaks, heading lower. Tesla, right at the channel low. If you're a bull and we're going higher, this is where you're buying. This is where you're buying with a stop just below, looking for a move back up to the top of the channel, which would be, in the 480 area. So those are the indexes and those are the top names. Now I want to make a point here. The top 5 names, the big names that we just covered, are 20% of SPY, of the S&P 500. 20%. Those 5 names. If, and it remains to be seen, but if those names break and money continues to come out, when you've got a 20% weighting in SPY, there is no amount of beaten down energy stocks and beaten down airlines and beaten down resource names that can keep SPY from going down if FANG breaks down. So does that mean, of course, if you're in one of the beaten down names, and we've talked about them, they're on our watch list. We own a couple of them. They could rise in a declining index environment. Airlines can continue to, grind away higher. The other cyclical names can, grind away marginally higher. But a declining index, make no doubt about it, is a headwind. Those names may outperform and may still, continue to grind higher green, yet they're not gonna launch, I don't believe. Now, when we turn to the Qs, the top 6 names, those are the FANG names plus Tesla, 45% weighting in the Qs. That's phenomenal. That is absolutely phenomenal. So if those names break, no amount of whatever other name you may have, software name, semiconductor name, when you got a 45% weighting in an index, that is massive if those names break. So keep that in mind. Okay, big option expiration today. I will keep you posted if I see anything. Look forward to mid-session update. We'll see if we stay range bound today or there's a move up and out of the range or down below. We'll keep our eyes on that. Double check all your option positions to make sure you've not got a position expiring today that you need to take care of. And we'll see how it goes. Thank you very much for your time this morning. I really appreciate it. New subscribers, I really appreciate you coming on board. For those of you that are new, hit the subscribe button. Jump over to the show notes for links to my blog and to sign up for my content. You'll get fresh content each and every day to keep you abreast of the markets, keep you dialed in on what's important. And I'd really appreciate you joining the team. I think that would be great. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.